Hello and welcome. This video will discuss pay increases and payroll taxes and how you can offer increased wages with the opportunities made possible by Smart Start workforce grants. It will also review the long-term implications of pay increases and how to protect your business. The information contained here has been prepared by Civitas Strategies and is not intended to constitute legal, tax, or financial advice. The Civitas Strategies team has used reasonable efforts in collecting, preparing, and providing this information, but does not guarantee its accuracy, completeness, adequacy, or currency. The publication and distribution of this information are not intended to create, and receipt does not constitute an attorney-client or any other advisory relationship. Reproduction of this information is expressly prohibited. Only non-commercial uses of this work are permitted. As a childcare program business owner, you value your assistants and staff and want to compensate them for the essential services they provide. However, you also know that navigating pay increases can be tricky. Ultimately, offering pay increases can impact your business's bottom line. In today's conversation, we will review ways you can offer pay increases through Smart Start workforce grants while also understanding the tax implications. We will review the types of pay increases you can offer, how to determine if your worker is an employee or a contractor, how to set up employees to be paid via W-2, and what pay increases will cost you. For family childcare and family group childcare, Smart Start. Workforce grants are used to pay for wages or salaries among assistants and staff, with the remaining amount going toward the business owner's income. When increasing the pay of your assistant or staff, be mindful of the associated costs that you will need to cover. With Smart Start workforce grants, the idea is that you will have income that was previously going toward wages now be free for use in other areas, like covering payroll taxes. While all Smart Start workforce grant funding must go toward wages, you may use other income sources to cover costs in other areas. You will need to compare your current pay cost with your new pay cost and include both rates of pay and payroll taxes. Determining the increase in costs when considering pay for your staff or assistant helps you make the strongest decision for your business. Note: through dedicated engagement and development at the state level, Smart Start workforce grants are being implemented as a sustainable and long-term program for childcare businesses in Illinois. However, like any other state-funded program, funding is contingent on annual appropriations by the Illinois General Assembly. Because of this Guide A will focus on the implications of temporary pay increases and corresponding payroll taxes. Another type is a temporary pay increase. Temporary pay increases are just that, an increase to a person's pay rate for a temporary time. This type of pay increase is meant to last a short time frame with a clear beginning and ending date. Perhaps you have an employee who you want to reward for their performance during a difficult time at your program. You could increase the employee's pay for the next 6 months, but make sure the employee knows that their pay will return to the original rate when the period ends. Clearly communicating in writing with your staff member is critical when choosing to use this type of pay increase. You would hate to lose a valuable employee over a temporary pay increase misunderstanding. Smart Start workforce grant funds can be used to implement temporary pay increases as long as the increases meet the grant wage floor requirements. You can also offer a long-term pay increase. Long-term pay increases are most desirable from an employee's perspective. This type of pay increase permanently raises the person's base level of pay without any planned reduction. From an employer's point of view, a long-term pay increase can help you retain valuable employees and establish your program as a desirable place to work. However, raising your employees' pay must be a sustainable business practice. You can use funding from the Smart Start workforce grants to offset the cost of the long-term increases. However, you will need to keep in mind that the funding is short-term, and you will want to have a plan in place to continue the long-term increase after the grant funding is depleted. As a childcare business, it is essential that you properly identify whether anyone working for you is a contractor or an employee. Contractors and employees are handled very differently under labor laws. A contractor is treated as a completely independent worker, taking care of their own employment taxes, and often you, as the employer, have fewer legal duties to this type of worker. Alternatively, if you have someone classified as an employee, you have more responsibilities to them and greater associated costs such as employment taxes and benefits. Seeing that the contractor classification is a less costly route, some childcare business owners will choose to have staff treated as contractors when, according to guidelines, they should be treated as staff paid via W-2, even when the staff or assistants would prefer the contractor classification. It is important to note that the decision on how to classify a member of your staff isn't up to you as the employer, nor is it up to the staff member or assistant. There are labor rules that help you know if the staff member you have is a contractor or an employee. You don't want to unintentionally misclassify someone as a contractor when they should be an employee, as this can cost you time and money. Even if you make an honest mistake, you could be liable for 100% of the employer taxes that you should have been paying all along, a portion of the worker's contribution to payroll taxes. This means you would be paying a portion of the taxes that you would have never had to pay in the first place. Criminal fines for thousands of dollars and/or the price of any missed benefits and other employee compensation, such as paid time off, things that the worker didn't receive as a contractor. You must make the correct classification so you can avoid these potential risks. Use the QR code on your screen or visit labor.illinois.gov/FAQs/ecafac.html for information on Illinois state employee classification laws. Setting up staff as W-2 employees is not difficult. You just need to follow these steps. If you don't already have one, obtain an Employer Identification Number, EIN. It is very important that you verify the employee's eligibility to work in the United States. You will want to take documenting your staff's eligibility very seriously. Payroll software will often walk you through the process of determining eligibility, but you can also visit https://www.uscis.gov/I-9 for instructions on checking eligibility and filling out Form I-9, Employment Eligibility Verification. Have the employee fill out Form W-4, Employees Withholding Certificate, to withhold income tax, Social Security tax, and Medicare taxes from their paychecks. Your next step is to set up a payroll system. This system will track your staff's wages and taxes, as well as any other deductions, such as healthcare or retirement. You must provide your staff with accurate pay stubs that show all gross wages, deductions, and the next pay after taxes and deductions for the determined pay period. You must deposit the taxes you pay as an employer, along with the taxes withheld from your staff's wages, to both the IRS and the state of Illinois. For federal taxes, you use the Electronic Federal Tax Payment System, EFTPS. Businesses must file quarterly Form 941 tax returns reporting the wages that have been paid and the taxes you have withheld. You will also file Form 940 annually to report and pay federal unemployment (FUTA) taxes. These forms and any payments due are mailed to the IRS. Be mindful of the associated costs when considering increasing employee pay, either short or long term, as you, the business manager, must be prepared to cover those costs. You will need to compare your current pay cost with your new pay cost and include both rates of pay and payroll taxes. Determining the increase in costs when considering employee pay helps you make the strongest decision for your business. To begin, calculate the current wages that you pay your employee each week based on the following calculation. Total hours worked per week times current hourly rate equal current wages per week. For example, you have one full-time employee that currently earns $10 per hour. Therefore, 40 hours per week times $10 per hour equals $400 current weekly wages. Be aware of the increase in payroll taxes that will accompany an increase in pay that you as the employer will be required to pay. Federal Insurance Contributions Act FICA taxes, 6.2% Social Security tax, 1.45% Medicare tax, which is withheld on all of an employee's wages. Use the employee's wages multiplied by the tax percentage to calculate payroll taxes. Current wages times 6.2%, or 0.062, will equal the Social Security tax. Current wages times 1.45%, or 0.0145, will equal the Medicare tax. Let's practice by using our previous example. Here's how to calculate payroll taxes for a full-time employee making $10 per hour. $400 times 6.2%, 0.062, equals $24.80. $400 times 1.45%, 0.0145, equals $5.80. This equals $30.60 taxes per week. To determine total current costs, you will need to combine the total wages paid to your employee with the total payroll taxes owed on those wages. By continuing with our example, the total current cost is $430.60 per week. $400 total wages plus $30.60 total payroll taxes equals $430.60 total cost. After you've calculated your current costs, then you need to calculate the new costs after you've increased your employees' rates of pay. Let's practice by saying you want to give your full-time employee an increase from $10 per hour to $12 per hour. You've already calculated the total weekly cost associated with $10 per hour, so you need to make the same calculations using $12 per hour as your rate of pay. New wages would be 40 hours per week, times $12 per hour equals $480, total wages per week. New taxes would be $480 times 6.2% Social Security tax, 0.062, equals $29.76. $480 times 1.45% Medicare tax, 0.0145, equals $6.96. The total would be $36.72 taxes per week, for a total new cost of $516.72. Let's find the difference between the total current cost, $430.60, and the total new cost, $516.72. To learn your total increase in weekly costs to raise one full-time employee from $10 per hour to $12 per hour, subtract the total current cost from the total new cost. $516.72 total new cost minus $430.60 total current cost equals $86.12 increase in cost. In this example, the total employer cost per week increases by $86.12 when giving this employee a $2 per hour raise, or $4,478.24 per year, multiplying the weekly cost by 52 weeks in a year. Do you have any questions? The Illinois Network of Child Care Resource and Referral Agencies, INCCRRA, will administer the Smart Start Workforce Grants. INCCRRA will provide technical assistance, answering technical questions, and helping with the application process through its website and via email. Email grants@incra.org with questions. New to Smart Start Workforce Grants is local technical assistance through the local Child Care Resource and Referral System. This will provide local grant experts to provide technical assistance and answer questions. Find your local expert using the QR code on the screen. And be sure to visit the Civitas Strategies YouTube channel for more valuable resources to support you and your business.